Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Peterson.
Thank you for joining the Real Estate Risk Report. I'm your host, as always, Lance Peterson. So today I have with me a longtime friend of mine, Tim O'Brien with Urban Asset Advisors. Tim is located in Portland, Oregon. And I've known Tim for years, going all the way back to our Entrepreneurs Organization days, EO, back in 2004, 2005, way back. So our entrepreneurial journeys have sort of been running in parallel. And so I'm super excited to have Tim on the show today. Tim is a multifamily guy and has been a multifamily guy his whole career. And he has an interesting journey that he's taken. And specifically today, we're going to dive into some stuff that we haven't spent a lot of time talking about, which is some, development. So ground up development isn't really a topic we hit too much, but I think that Tim has really unique insight into that. He's helped multifamily guys in the brokerage side, acquiring multifamily for years, and has got a neat story about how that really was able to come together for him with the current version of his strategy and how he's able to sort of add value. So we'll get to that in a minute. But Tim, thanks so much for joining us. Why don't you share a bit with us sort of how you got into the real estate biz? I know it's pretty much a lifelong deal for you. You've been doing this a long time. So maybe just share with us what interested you, how you got into it, and kind of your journey to ultimately launching UAA, or Urban Asset Advisors.
Yeah, you bet. Lance, thanks for having me on. It's great to see you. And yeah, it is. It's great. It's so interesting how our entrepreneurial careers have kind of shadowed each other here. And it's been fun to see your guys' progress as well, and the fun game and all you're doing. So thank you for your good work. You guys have such a solid reputation. It's a pleasure to be working together. So yeah, I guess you could say, real estate my entire life, actually, going all the way back. I think about even when I was a kid, like 5, 6 years old, like playing with Hot Wheels and building these elaborate cities in my basement in the winter in Portland, Oregon. And then in the summer, I'd take it out of the sandbox. And then in my teen years, my dad, and buying some rental properties and just rolling up my sleeves and helping out with landscape or tearing out walls or painting or whatever needed to be done. And I just love that transformation process and just dealing with the physical asset. But ultimately, really got my career in apartments and real estate started in the mid 90s. Started in the Portland office at Marks Millichap. At that time, it was a brand new office. They just opened it like 8 months prior, and it was a real estate broker focusing on apartment buildings. And then shortly thereafter, in '99, launched my own apartment brokerage company with 2 partners called HFO Investment Real Estate, which actually is still in existence today. And we brokered, I was doing the math when I launched UAA, we did over $1 billion worth of apartment transactions in that period of time. It's just like mind boggling to think about, like how many property management statements and underwriting and sales comps and rent comps. And it's, but I love it. I love this. And so really my journey as UAA started at HFO, interestingly enough. So in 2012, we bought this little 10,000 foot lot close in Eastside Portland, and I was going to move our office there. And I had been helping a lot of developers of apartments do pro formas, their sales comps, their rent comps, all run their numbers. And when I looked at this piece of dirt after we had already put in contract, I'm like, we need to do a development here. It was perfect. It was zoned right. We could put a 6-story building with ground floor retail on it. It was exactly what I'd been underwriting for my clients. And so I launched that when I was at HFO. And then part of the way in, actually within the first 7 or 8 months, my partners decide, they came to me and they said, hey, we just really don't want to be in development. And so I'm like, man, I love this. And I had already hired the architect, got the GC, almost raised all the capital. It all came together pretty fast, and I respected their decision. There was a conflict of interest there inherently, and they didn't want to deal with that. So I said, listen, guys, I'm going to do this thing. And so anyway, long story short, they bought me out and I launched UAA in 2013. And since that point, we've done just shy about of $500 million worth of ground up, mostly urban apartment building development. Um, and then also we do add value acquisitions, which I've been doing since 1998, just buying apartments, finding a way to add some value. A lot of times they're operational, but a lot of times also like just improving the asset itself physically, like updating units, exteriors, what have you. So that's kind of the summary version of how I got to where I'm sitting here today.
Yeah. No, I mean, I think it's good, right? Because I mean, many developers, they have, they're different than operators, right? So I mean, just their personalities. Now, this is a generalization, of course, but developers they have vision, right? And they see this different version of the future, right? So they see a like you call it a piece of dirt, right? It's just a lot,
Mm-hmm.
and
what
they
can
have
be, right?
Yeah, what can it be? And not everyone has that, and it does take a different type of person. And I think at times, though, I think that's what makes it hard. It's one thing to see, well, there's already there's a 250 unit multifamily, property it's already there, right? And so then it's more operational, and so people, it's like, well, how can I make it better? Or like Strengths Finder he's like the maximizer, right? They can take something that's already there and make it even better. It's a lot different, sort of envisioning something that's not there and seeing how it's neat. Like you said, it's just this has got to be done, right? Like we got to put this here. So I think that's just something not everyone has. So for you, and you even went back, right? It's like you're building cities in your mind when you're sandbox, when you're 7. It's sort of there, but I think that the training and the years and years and years you were sort of in the trenches, just helping consummate transactions, is sort of what every time I've spoken with you is kind of what you point back to, is that, in order to help someone buy or sell these properties, you have to be intimate with all of the details. And maybe you can shed some light on that, as how it really is. It's beginning with the end in mind. Because for you, it's like you could see like, hey, the potential there, but it really, that extra piece that maybe not every developer who has sort of vision, sometimes they're missing, not all of them, but sometimes they're missing this next part, which is, yeah, but what do the numbers need to look like at the end, and who's going to take you out? And, those sorts of things are maybe the missing components. So maybe share a little bit too, how you, when you do see something, that process you go through to kind of go to the end and work backwards.
Yeah, they always say, begin with the end in mind. And it's no different in development. It's no different in buying an asset. It's no different than when I was a broker, right? And this vision that you talk about, I mean, I really did bring that to my brokerage business too. And I think that's why I had so many loyal clients. I mean, a very common thing I would say to my clients is, hey, listen, yeah, we can list it and sell it today, but if you do X, Y, Z, I can sell it for, 10, 15, 20% more if you can just wait 6 to 12 months, right?
Mm-hmm.
And that was really unusual. I think it still is a lot, where because brokers are, brokers make money on fees, right? And you make a fee by selling the deal, not by advising them, right? So
wait 2 years.
And we always use the term like time kills deals, right? So here I was creating more time in the deal as a broker, like for somebody else to come in and just buy it out. But I guess I've always kind of been enamored with, like you say, this vision and what it can be, whether it was one of my clients' assets when I used to be a broker, or today, whether it's a development looking at a raw piece of dirt and envisioning what can be there, and most importantly, who do we want to serve, right? Because our clients truly are the tenants in these buildings who are, voting with their rent check, right?
Mm-hmm.
Or my investors, right, who are voting with their investment dollars, right? Why do they want, why should they invest with, Tim O'Brien versus, whoever else out there, right? And so those are kind of our two client groups, and we do always, and that is, I guess, the development side really it's kind of like that blank slate, whereas like the add value game or the core plus game is more about buying existing assets and kind of tuning them up, right? So you're still going to stay with the original kind of canvas and picture, if you will, using that analogy. But we're going to go in there and we're going to make it better, right? We're going to deliver a better experience to those tenants. And ultimately that will increase the value of the asset. I mean, that's how it works, right?
Yep. So for you then, when you're out, like you said, I mean, you're basically, you're going to buy existing stuff as well. But I know that your passion does lie in finding a project you can go vertical and come out of the ground. That's very satisfying for you. And once again, I think for most developers, that's why they do it. They like to see those visions become reality. But the process then of sort of scouting and looking for locations. I know you were, through this last sort of bull run, your timing was impeccable, in the Portland metro area. So you did really well, and your projects were well located and well done and all those sorts of things. But how do you now, right? I know you sort of, the opportunities aren't as many there in Portland, but so what is your process as you're out there looking for other cities, or, and then when you do identify a potential development site, what does that process for you look like? What are you running through, because it's just right, like the feasibility and all that stuff. I mean, that's one of the parts. You got to be patient if you're going to be a developer too, right? Because you got to look at a lot of things. There's a lot of work that you have to do up front before and a lot of projects never make it that far. So maybe shed some light on that and give us some more color around what that process is, which of course is very different than scouting in place multifamily assets.
Yeah. And actually the two processes are not that dissimilar, interestingly enough. It's kind of back to the basics, right? It's really supply and demand, right? And I guess fortunately for our group, we are basically across the country, whether you're in a primary market, a secondary or tertiary market, like there is a severe supply shortage of housing, right? And so the supply side is anemic in most places. There are certainly those markets that have been overbuilt. Portland actually was one of them here up until about 6 or 8 months ago. We basically had our supply meet our demand for about a year, call it a year and a half. We're now behind the 8 ball again, and rent, buildings are filling up and we're renting, and rents are going up as well. So, but that's one of the big drivers we look for is supply and demand. Do we feel like there's a need for new housing? In other words, are there people moving into the market, and why are they moving there? So we track that very carefully. We also track the demand side very carefully, which is basically the pipeline of new projects coming online. So we'll look at those two numbers. And then developments is really simple. It's what is the project cost, and what is the, per foot, and what's the rent per foot that you can get for the project. I mean, obviously there's a lot that goes into those two numbers.
Yeah.
A lot of research, but in general, that's how we determine whether a project is feasible or not, financially.
Yeah.
So that's really the primary. And then we look for areas that we can deliver a high quality product. We are very particular about that. And so usually that involves being, 50-yard line, I call them, locations, because we are building best in class product. And so to get best in class rents, we have to be in an area where our best in class product will achieve those rents. Yeah, typically. I mean, we've done some stuff in the suburbs, and mostly that's been in areas where, they've got good dynamics, close to employment centers. They've got high demand. They've got very low supply, where we can go in and deliver, albeit still high quality, maybe not, a vertical of housing, like a little more garden style, I guess we'd call it.
Right. So for you then, what, like when you're assessing a project, and what is the thing that you lose the most sleep over, or the thing that stresses you out? Is it like budget overruns then? Because like you said, you can nail down some of those things, but then it's what if this thing costs more to build? And how do you mitigate that? Like how do you reduce the likelihood that something like that happens?
Yeah, a lot of that, and that is certainly one of the things that we are concerned about. We do gross maximum price contracts with our general contractors, so we know if we've got a good design and their bids are all based on that design, that they will deliver that product for that price. Saying that, there can be issues that happen if you pick the wrong team, right? So if you pick the wrong general contractor and they aren't accountable to that contract, right? Which has happened to others. That hasn't happened to us, fortunately, knock on wood, because we have picked the right teams. But and then also your architect, right? Making sure the drawings are super solid, really nothing left to the imagination, as I like to say. Like, that mitigates a lot of the issues. And then also having that contractor at the table early in the design process, they're weighing in on things all the time, right? So that we're working through a lot of the issues, as I like to say, in 2 dimension before we actually start building in 3 dimension. It's a lot easier to rectify and get your arms around and solve there. Um, the thing about development, I always say too, is like, we put a pro forma in front of an investor, a bank, or anybody else, and my kind of now become famous line is like, and barely any of these numbers will actually be what they are on this piece of paper when we're done, right? Because what is development? It's envisioning something that isn't there on a blank piece of land. Like, so
Right.
how do you know exactly what your expenses are going to be, or your income, or your costs for that matter? And so it's really understanding which parts of that underwriting pro forma to provide the some cushion in, right, so that you can absorb the cost overruns, which are inevitably going to happen somewhere, right? You never know where they're going to hit, though, and my job is to try to really mitigate that. And so as a result, we haven't had a big issue with cost overruns. Have we had stuff go over? Absolutely. But
Yeah.
we've estimated properly. We have reasonable enough contingencies to absorb those, that we're able to come in on budget, to the pro forma by doing that. So
it sounds
it's
like
not a science. It's not
Yeah.
a science
No,
by any
science.
stretch. There's some art in there.
Yeah, no, that makes sense. I mean, so what I'm hearing you say is like, okay, if you're a potential passive investor and looking at investing in a deal that's going to come out of the ground, digging a little deeper to see who is the general contractor, who is the architect, making a few phone calls or even around those people, not just the developer itself, would be prudent, right? I mean, because that's just it. Anybody can wake up today and call themselves a developer, right?
Right.
And I think that's some of the stuff that we try to help people on this show with, is just being able to tell the difference between things, right? And then how does one go about determining whether there is a difference? Like, your story is great. Multifamily entire life, brokered $1 billion worth of transactions, like all these things started in Portland, or it's building stuff literally in your hometown, in your, boyhood backyard, right? Things like that sort of substantiate familiarity with the area, the process, all those sorts of things. But you see, the best thing about development projects is the pictures are always really pretty, because they're all
Yeah.
just drawings and renderings, right? Like, ooh, that looks amazing, put money
Yeah.
in there. But yeah, and it can be a grand slam, or you can go backwards, right? As an investor in these development deals, if you pick the wrong people, right? It's just the likelihood of that happening is certainly higher than maybe something that's in place. So therefore, as an investor, would you agree? I guess you're the expert. Do you feel like you have to be a little bit more diligent when deciding, in the vetting process as a passive investor looking at one of these deals?
Absolutely. Without a doubt, it's so much more straightforward to go buy an existing asset. And there's a reason that development deals have higher returns, right? It's
Yeah.
risk reward here, right? And so, yeah, I have folks that have come to me, and I frequently just tell them, like, this isn't, if they're using, like, they're, well, first of all, if they're borrowing money to go put into our deal, I'm like, no, that's just not a good idea. But you have to understand, like, if you're basically investing in an estimate and a person to deliver on that estimate, right? And so, what is the track record of that person, right? Have they delivered successfully development projects on a regular basis, of similar size and scope and style to what you're investing in? And if the answer is no, you know, really dive in and understand, like, how are they going to deliver this then, right? Because it isn't, it is all about the team, and it is all about kind of understanding how to produce an estimate that's close, right? Again, it will never match up. the best developer in the planet is not going to match exactly. It just can't. But
Yep.
the good developers, I think, will, they're around for the long haul. You'll see them there for a long time. They've done, you know, uh, lots and lots of projects, right? And so if they've done 10 projects, just like you're investing in a similar area and size and scope, like, the odds are probably pretty good they're going to deliver again, short of something really crazy happening.
Yeah.
That's really what I would really look at mostly is just track record. Have they done it before? Because, yeah, like you said, anybody can hang their shingle out there, but I will say I've seen a lot of messy development deals that, they bring to me to kind of buy it and because they can't do it.
Right.
And 95% of those, I'm just like, I can't even fix this. Like your civil engineering is so off. Like your building layout and your efficiency is so poor, the deal will never pencil, right? Short of just scrapping what you've done so far and starting from ground zero again with a different team
Right.
and a different design, right?
So that's it. That's interesting because what I'm hearing you say is that if you know what you're doing, that means that even when they're all guesses, you basically could review those drawings and their pro formas and those sorts of things. Like if that group would have brought that stuff to you before they even put a shovel in the dirt, you probably would have looked at it and said, I don't see how you're getting there. Is
Yeah.
that fair?
Yeah, for sure, for sure. And usually, like we'll get them. A lot of times they're deep into the drawings, right? And so fortunately in this world, unless you're building with cash, like there's a lot of different folks along the way that are going to
Okay.
tell you that it's not a good idea to build this, right? Like the bank is a big one, right?
Yes.
They're going to look at that thing like, listen, this thing doesn't work. Like for so many reasons, because the banks know what they're doing. They see these things all day, every day. They have construction managers they hire to oversee the project that they're lending on, right? And they're going to have those folks review the drawings and go, this isn't good. And so, and a lot of times, I mean, that's really drastic, but get people coming to me after when they're at that point, the banks turn them down because the bank says it's not doable. Like it's too late
Yeah.
at that point. Like that's kind of sunk money. And if they own the land, then that's not usually a happy ending, unfortunately. And
Well, there you go. So you hit on something there, right? So this is part of the, development is all about de-risking along the way. So
that's exactly right.
what I
Yeah.
hear you saying is if you're a passive investor, someone shows up and says, hey, I'm going to, build this, this apartment building, whatever. And, we haven't bought the dirt yet, or we haven't done whatever. And we don't have a term sheet on the bank that sort of, I mean, those are the little markers that you can have in place because you putting money in before the bank has sort of approved financing. I mean, I don't know, maybe how do you do it? I mean, are you going out and getting equity, like capital commitments before you've got a bank firm, or do you wait until you sort of get the bank financing, LOI signed before you start to raise the equity for the project? I mean, is it fluid?
Yeah, well, we usually always raise the equity before we go out and get the bank term sheet.
Okay.
But we've also got a huge track record, right? I mean, we have banks that we've banked and done multiple development deals with, I mean, multiple banks, multiple development deals. So each of these banks is used to seeing our stuff. They've seen us deliver. They've seen us pay off their development loans, right? Construction loans, which is always a good thing, right? And so we do raise money on a pre-development basis, and we do it. Actually, we have investors typically wanting to be in that pre-development because their preferred return starts right when they give us the money. So, but again, that's because we have a track record and they've invested with us. Most of our investors are in, a handful of deals. Some investors are in every single deal of ours, right? So it's not, they already know our ability to deliver, right? But for new investors coming in, like I always tell them, like, do your homework, right? And if you're looking at somebody else, make sure you're doing homework. Just like I would tell them to do with somebody else, like do your homework on us. Yeah. Call our investors that have been in multiple deals, or give your bank references. You can call our bankers who have done multiple projects. Like, I mean, verification, right? I mean, it's what you're doing with Verivest, right?
Yeah.
I mean, it's such but especially in development, at least with an existing asset, it takes a lot to screw that deal up because it's already producing income, and the bank's you're not buying it without the bank financing. So you're not going to close unless the bank gives you the financing. So that deal's so de-risked. Like with the development deal, having this verification that you're doing, I would say, is even more critical, right? Because if you truly get a verified person on their development deals, you're going to have a lot more assurances that person knows what they're doing.
Yeah, it's a good point. Yeah, and I think those are the things, right? Is that if you have invested in a development deal, looking for those kind of updates to see that those thresholds are sort of being met, right? Because that's one of the things I think through is some of the fear, right? Is you do put in the pre-development dollars, and then they're just sitting there spinning their wheels, and they're sort of not. You're in the dark on the status. Now, of course, I'm just assuming like it's always gonna. I'm trying to think of like these deals that do go sideways, how do we help people identify it sooner, right? But certainly, and I know you're like super transparent just in how you communicate and those things. That's just how you're wired as a human, but keeping those investors abreast of like progress. But if you're not hearing progress on a development deal or not getting updates, that's can be a red flag, right?
Oh yeah. I mean, and I will say I have had many investors that have come in, whether it's real estate investment or anything else, like communication, communication, communication. I can't tell you how many people that will tell me after they've been invested with us for a year, even a couple quarters, and they're like, "You actually give, a real update every quarter." Like, yeah, that's what we said we were going to do. They're like, but you actually write it out and you give it to us and you tell us what our preferred return is, like accruing what we've accrued so far. I'm like, yeah, actually our investor portal does that, already, but we do a narrative too. And as you said, Lance, I mean, we're very transparent. We give the good with the bad, and there's always some hiccup going on in a deal. I mean, whoever tells you there isn't is just not being truthful. You can plan to the nth degree, and there's always something going sideways, right? And so you're always having to kind of adjust and move and deal with it. And the investors deserve to be taken along and communicated with on that journey. I mean, it's only fair. They've put in their hard dollars, and they should be kept apprised of what's going on. And yeah, a lot of times things go really smooth. I mean, most of the time things go really smooth, but there's always something. I mean, it's always something.
Yeah, no, and that's another good point too, is that like, I know for you, it just seems obvious. But I think that what I've learned in working with a lot of, developers, operators, whatever, is that they really have a hard time sharing any of the bad news. Like, once again, even if it is going smooth or, sort of smooth or whatever, it's just like they never want to like share that something's not, you know what I mean? And it's sort of like, because they think that that's the better way, when it really isn't, because most people that have been on the planet long enough know that's just not how life works, right? So it's actually like, well, how can it be that nothing is ever going wrong, right? Like, and so I think for any of you deal sponsors out there, like just realizing that it's okay to share what's going on. And I think a lot of them are just afraid because they're going to freak people out, and people are going to call and get all worked up. It's like, well, maybe one will, maybe someone will, but it does seems like a good opportunity, as far as I'm concerned, to be like, hey, I'm sharing what's going on. I mean, these things, once again, like you said, like you're going to the banker, you're saying, I can tell you, I can guarantee that nearly every number on the spreadsheet's wrong, right? Like, because you have no problem saying that, right? But it's just sort of like, it's all wrong. I've guessed. But a lot of people feel like they could never say that. They could never share what's going wrong. But then if someone is sort of out to lunch and investor is going to make a big deal about it, it's your opportunity to say, there's risk here, right? Like, of course things are going, it's just, there's a lot of moving parts. I'm just being transparent. I'm just sharing with you what's going on.
Well, and I'm that way when I interview my investors before they put a dime with us. Like before I have a new investor come in, I mean, we're as critical in interviewing the investor as they are us, right? Because we don't want folks, if they've never done an investment deal that's something different, either like either a real estate syndication like we've done, or a fund that's done development, or I had a guy actually, I almost wasn't going to let him invest with us because he hadn't done any kind of real estate deal like this. And then I said, what kind of investing have you done that's kind of non-traditional? And he's like, oh, well, I've invested in startups, like with like seed money for entrepreneurial startups. I'm like, oh, oh, okay. I'm like, how long have you done that? And he was telling me, oh, I've done it a couple times, a couple different funds, and I'm like, oh, well, this is nothing then.
Yeah, exactly.
In that world, I mean, I'm preaching to the choir, Lance, but I mean, if two of your deals pay out, you're happy. Like, that's better off. Like 1 in 10 is kind of the odds that I always hear.
Yeah.
2 in 10, like you're hitting 3 in 10, you're hitting the lottery. Like you've just hit the lottery. You found somebody who knows how to pick deals, right?
Yeah.
And then the other 7 to 9 deals goes to zero. You actually lose your capital. I'm like, okay, so this is the comparison. Like, we've never lost anybody's capital.
Yeah.
In fact, we've never, not only have we not lost people's capital, we've never not at least paid the preferred return on our worst deal.
Right. That's right.
And I'm knocking on wood. There's always
but that's a good point.
But again, it's like
that hurdle was there to say this is the bare minimum.
Yeah. So he's invested with us now. Yeah, but that was a funny conversation. Once he said that, I was like, okay, you're fine.
You have a high.
You understand risk. You have a very
I can explain this to you. That's exactly right.
That's right. Yeah, he got it. We laughed.
Very good. Well, let's sort of wrap up. I'm always curious to get your kind of input on kind of markets. You've got before we hit record, we were mentioning sort of Salt Lake, and you've got Boise, and I know you've got some stuff going on in Bend, Oregon, which is a wonderful place, and then obviously Portland. But maybe give us some feedback on kind of where some of these markets are and how you're feeling about them, and which ones you're bearish on, which ones you're bullish on, and where are you kind of looking? How you feeling about that?
You bet. So so Portland has been our home base. We've done so much work here. We continue to. Actually, it was interesting. We had a period there during COVID where we kind of lifted our head up because Portland's gotten tougher to do deals. We're overbuilt. The regulatory environment has gotten tougher. The fees and everything involved to do business here have gotten higher, and deals just don't pencil right now. So we had to kind of lift our head and figure out where else we can start doing deals. We have one deal going in Portland right now that is over in the Woodstock neighborhood, and we're super excited. It's such a great market and very underserved by housing. But in general, other markets. So Bend, we just closed on some land up by the OSU Cascades, Oregon State University's Cascades campus on Friday last week. And then we've actually have another piece of land we just wrote an offer on in Bend. So that market is like this boom town, right? It was booming. It's boomed multiple times, and it really is boomed with this, the Zoom effect, the COVID effect, in addition to just good drivers for population growth beyond that. So, and it's well underserved for housing, and will continue to be for some time. So we're active down there. Salt Lake City, we've gone and studied that market. Very great market. Again, underserved for housing, like most of the cities in the primary, especially primary, secondary cities in the United States. What we found there was, at least at the time, and this was about 2 years ago when we looked at it, people there were not willing to pay rents for really high quality product in a good location. They just weren't. They wanted, and there was a lot of institutional kind of larger product, somewhat lower quality, and which allows you to charge lower rents. It was getting built there, and we just decided it wasn't a market at that time we would go and build in. Saying that, I love it for acquisition. I think it's still a good acquisition market. Boise, actually, it's a phenomenal market for both building and for acquisition. The problem is the window's pretty much closed for development. Their pipeline right now is really robust. Everybody and their cousin evidently decided that Bend was on them all of a sudden on the radar, and their pipeline went from like 1,000 units to like, I think 6,000 units or something in a period of like 8 months. It was crazy. I've never seen anything like it. And so I went, when I kind of lifted my head and I went back and looked at it to go make flight plans, I was like, oh, we can't build anything over there because the pipeline is it's too big right now. So we would buy stuff over there, and we've got some feelers in the market for that. And we've got some other West Coast markets we look at, Reno, Sacramento, Phoenix. San Diego is actually a market we really like and are bullish on. And so for acquisitions, at some point we may look at development down there as well, but at least initially going in with an acquisition.
Yeah. No, that's good. Yeah. I mean, Bend is it's a great place. And I mean, every time I go there, I just like, it's the type of place, which is weird. It's like, you don't want to go home.
It's
You get there and you're just like, can we just stay? Like, do we really need to go home?
All
Like
my needs are met, right?
Yeah, that's right. And I mean, and it's every other place, you go to like Palm Desert, or you go to Phoenix, or you go to these other places that are nice to hang out, whatever. I'm always like, okay, I'm done. Like I've had enough. I'm ready to leave. But Bend is the sort of place where it's just it's a really unique, special place. So it's now their infrastructure, roads and all that stuff, they're going to have to get that figured out, because it is going to continue to, it's just going to grow and grow and grow.
And they are. They're putting a lot of infrastructure in right now, actually, in some of the key areas, especially on the west end. They're putting in a lot more turnarounds or turnabouts and doing road improvements and sidewalk improvements and all this stuff. They've actually done a phenomenal job on their infrastructure. I don't think I've seen a city anywhere that rivals the parks that they have there, and the quality of the parks and the upkeep on these parks is like nothing I've ever seen. I mean, you just go walk around, you're just like, oh, it's on the river, beautiful pine tree forests, and it's magical. Absolutely. You've got the mountain right there to ski. You've got mountain bike trails everywhere. I mean, it's
lots of sunshine.
Little slice of heaven. Lots of sunshine.
Lots of sunshine. Yeah, it is. It's for those of you who have never visited. I mean, it's a place you got to put on your bucket list and spend, 2, 3, 4 weeks. Just, go there over the summer or something. Yeah. And I read this week, was it in, I don't even know what it was on, some online news thing, but I think one of the guys, like the heirs to Walmart or someone's going to build like a new city in the West, in the middle of the desert. It's going to have like it's like literally going to create, in Nevada or, someplace in the middle of nowhere, like the next Phoenix or Las Vegas, just out of nowhere. Which of course, at the same time, I'm reading the article about the Colorado River drying up, and it kind of runs counter. Like exactly, like we already have a problem. So, but I thought of you when I read it. I knew we were going to do this recording. I'm like, there you go. That's the visionary of all visionaries.
Yeah, right.
Create a new city out of nowhere, right? But that is the beauty of the West, is that it just, it's a great place to be in the Western United States. And there really aren't, when you get down to it, there's not that many places, right? I mean, especially urban, density, it's just, there aren't that many, which sounds crazy, but it's, outside of California, I should say. So,
well, that livability element, right? Where you've got that great urban core for those folks that want to be kind of walk to everything, right? All your bars and restaurants and night, and your shopping and everything all within walking. And then, but then also having a nice, kind of outskirts and suburbs, right? Where if you like getting in your car and you like having a little bit more space around you, and there's something for everybody. And that Portland really, and these cities I've mentioned, they all have that, right? They all have that desirability, and they all have an airport, so you can get, if you need to hop on a plane and go somewhere. I mean, Bend has a airport. You can hop into one of the big cities and you're off to wherever you want to go very easily.
Yep. Good stuff. Cool. Well, where can people learn more about what Urban Asset Advisors is doing?
Yeah, you bet. You can go to our website, www.uaapdx.com. You're welcome to give us a call, 503-445-7557. And then you'll be able to find us on Verivest too, our first fund. So, check with the Verivest group and look up our fund. We'd be happy to talk to you.
Yeah, very good. Well, thanks so much, Tim. I always enjoy our time. It's a lot of fun to connect and love getting your story out there and sort of the unique perspective. And once again, I think standards bear in terms of things that all investors need to sort of fish for when you're speaking with, deal sponsors, especially, developers. There's some more to it. And it really does come down to, who are these people behind that? And it's worth investing the time to sort of get that level of comfort before you decide to proceed. And so thank you so much for sharing and being willing to well, I guess just being yourself. So thanks so much.
Thank you, Lance. I appreciate it. And I appreciate all you're doing too for this this kind of fund and investing world in real estate. It's great. It's much needed too. So thank you. And it's great to see you and talk to you.
Yeah, my pleasure. All right, take
All
care.
right. Yep, you too.